They try to mitigate it by making it something less than an explicit transaction. The term of art is quid pro quo. That's your guy's term, not mine. It's a legal term, but what it means is give and get. What's the quid and what's the quo? What are you offering and what are you getting in return? If the quid pro quo is not an explicit transaction, courts have ruled it's not bribery, it's not illegal. So the best defense is, well, yes, I raised money from that source and I voted for a bill that helped that source, but I also have money from sources on the other side of that argument. And I also voted for other things that weren't pleasing to those donors and so on. So you cloud the thing this way. The Schumer story is a wonderful example. And another important lesson about how Washington works now. In 2007, the Democrats come back into power in the House and Senate for the first time since '95. And in the excitement of the liberals in the Democratic Party back in power, Charles Rangel of New York, the chairman of the Ways and Means Committee, proposes a change in the tax code which would tax the earnings of hedge fund managers as well as earnings. They had rulings from the IRS that said that hedge fund managers, because of the funny way that they operated, could treat their income as capital gains. Well, the maximum tax on capital gains is now what, 15%? The maximum tax on income is nearer to 40%. So this was an absolutely wonderful deal for the hedge fund managers. Rangel said, this just doesn't make any sense. These are some of the richest people in America, and they're paying some of the lowest taxes in America. This is wrong. Let's change it. In fact, the House voted twice to change the law in 2007. Now, Schumer, a powerful and influential senator, not least because of his role then as the chairman of the Senate Democratic Campaign Committee, the chief fundraising arm of Senate Democrats, and he was a prolific fundraiser who had found millions and millions of dollars to help his colleagues run for election and re-election. Schumer, known for years as the senator from Wall Street, lets it be known that this is not a good idea and he's not going to support it. And he goes about his business behind the scenes. I'm sure, I don't know the whole story, no one does, but I'm sure reminding people how important his fundraising is for them, these other members in their re-election campaigns. And one way or another, the idea passed by the House to tax this hedge fund manager's income as income never comes to a vote in the Senate Finance Committee. It is never considered. Schumer's a member, he's not the chairman, but he's an influential member, but his argument prevails. So there are no fingerprints. In fact, nothing happened. And this, I argue in the book, is one of the most effective kinds of lobbying in Washington. It's much easier to make something not happen than to make something happen. Actually, getting something that people hadn't thought of or weren't sure they wanted to do through the Congress is really hard. But stopping something from happening, relatively speaking, can be quite easy.
This excerpt is brought to you by the Massachusetts School of Law, the leader of reform in legal education and a leader in multimedia education for the public. To view the full interview and for a full listing of MSL's programs, log on to mslaw.edu.